Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know, but nothing more regarding factors and developments that are likely to affect your investment portfolio. And today, on Friday, June the 13th, we begin our weekly wrap-up show where we go over important developments that occurred every week that likely will affect your investment portfolio over the near term as well as sometimes many months into the future. So let's begin by, let me begin by saying that although the major story shows, that is what is referred to as the major media outlets, continue to focus today on developments in Iraq, I paid little attention to what's going on there. Now, when I say I paid little attention, I can assure you that I probably am well aware of everything that any of the major news outlets are aware of regarding developments in Iraq, and probably more knowledgeable than a lot of the persons that report on those stories. And that's just what the situation in Iraq is. It's a story. It's when the media talks about what's going on there, and that is regarding what is referred to as the Islamic State in Iraq and Syria, sometimes referred to as ISIS or ISIS, a Islamic terrorist group, in regard to the attacks that group has made on several Iraq cities over the past 6 months. First in Fallujah earlier this year, then in two major cities in northern Iraq, Mosul and Tikrit, where that terrorist organization is taking control of those cities. The media focuses on that development because there's a good story to tell you, and it's likely to capture your imagination. And but as I said yesterday, that's all it is. It's a story in regard to the financial markets, or at least the financial markets in most regions of the world, including the United States. And the reason that I say that I failed to mention in yesterday's show when I discussed this subject briefly, is from a financial perspective, and only from a financial perspective. Who cares what's going on in Iraq? You're probably responding already by thinking, I care. Oil prices could skyrocket, could have a big negative effect on stock prices. Yeah, it could, but is that likely to happen? And the answer is no, quite the contrary. It's very unlikely to have any substantial negative impact on oil prices or U.S. stock prices. And why is that? The reason being is that the United States imports less than, well, let me put it in a different way. Of all of the crude oil that the United States consumes on a daily basis, by far the most in the world, it imports less than 10% of the crude oil that it uses from Iraq. Less than 2% of crude oil that the U.S. uses on a regular basis is imported from Iraq. So I don't really care what's going on in Iraq regarding from a financial perspective, that is. I mean, yeah, it looks like to me a civil war is underway. But that comes as no surprise whatsoever to me. As I told you yesterday, those of you that watched and listened to our show yesterday, I forecast in 2004 that as soon as the United States withdrew a large portion of its troops from that region of the world, from Iraq and Afghanistan primarily, that a civil war was likely to develop. And this isn't because I was simply doing some guesswork or making some unfounded predictions. I made this forecast because I spent several weeks, every day of the week, for several weeks back in 2004, doing a lot of research and analysis regarding historical events that have occurred in that part of the world, learning as much as I could about the differences between Muslims that are Sunnis and Muslims that are Shiites. I mean, I could go on and on and on. I studied a lot of terrorist organizations, learned a lot about them and what they tend to do. I looked at and reviewed very carefully political factors and the situation in Iraq. And so I did a lot of research. I just didn't make some unfounded forecasts. I did a lot of research to make that forecast. And I was very, very confident that as soon as the U.S. withdrew a substantial number of its troops from that region of the world, there was very likely a civil war was going to begin. And it looks like that's what's going on here. But I don't care. I don't care. And you shouldn't care either in regard to your financial market investments and speculations. So let's leave that there. I say that because as long as the United States does not foolishly get heavily involved in the politics and what's going on in Iraq regarding these attacks from these terrorist organizations, it doesn't foolishly spend hundreds of billions of dollars again and getting involved, this is not going to have any negative or positive impact. It's just not going to have any substantial impact on the United States. So enough about that. Now, having said that, and going over what other things, other important things, developments, factors that occurred during the week. First of all, let's review the changes on major stock market indices around the globe, which I do on each of our nightly shows. Every other day of the week, I review the daily change in those indices, but on our Friday shows, I'll go over the weekly changes. And this past week, all of the major U.S. stock market indices pulled back very, very slightly, as did the major stock market indices for Europe. And Japan's major stock market index, the Nikkei 225 index, was essentially unchanged this week. Meanwhile, Shanghai's, China's Shanghai Composite Index and India's Sensex Index were up very modestly this week, while Brazil's Bovespa Index rebounded sharply this week. And that really doesn't come as any surprise to me. I keep saying that, but it doesn't. If you watch and listen to this show every night, you'll know why I say things such as that when I say this doesn't come as any surprise. And that is, those of you that have been watching and listening to the show, you know that 2 weeks ago that I told our listeners and viewers that the recent trading action in most stock markets around the world, but primarily the United States, indicated that stock prices here in the U.S., that is stocks that trade on U.S. exchanges, were likely going to pull back a bit during the ensuing couple of weeks, and that's what exactly did occur. And that stock prices in most other regions of the world would likely either move up very slightly down, or just sideways, and that's what has occurred. And the reason I made those forecasts, and the reason that, in my opinion, those forecasts came to fruition, is because there weren't any indications of any major developing changes in economies around the globe, and there weren't not any major geopolitical developments that will likely affect the United States or most other countries outside of regions wherever those geopolitical developments might be occurring. So, in looking forward, well, before we look forward, let me go over just very, very briefly to not just mention what stock market indices did to the week, but to review some of the economic announcements that were released this week. And for the United States, the U.S. Department of the Mortgage Bankers Association, excuse me, announced earlier this week that mortgage applications rose sharply last week, that is during the weekend of June 6th, up approximately 10% as compared to the prior week, and that those mortgage applications had risen to the highest level since January of this year. Very, very positive development regarding the housing market. Meanwhile, the Federal Reserve, I stated yesterday, the U.S. Department of Commerce released numbers on retail sales, but it was actually the Federal Reserve that gathers and releases statistics on, or at least the statistics that I follow on retail sales, and that is sales at U.S. retail stores. Sales at U.S. retail stores, the pace of increase during May slowed just a bit, but still, sales at U.S. retail outlets on a year-over-year basis, that is this month compared to the same month a year ago, were up during May in excess of 4% for the third consecutive month. So that's a very, very positive development. Economic statistics out of Europe and Japan were somewhat mixed this week, with economic firms and agencies in Europe reporting that industrial production in the Eurozone rose during April, the latest month for which data is available, after falling during the prior month. And that was the only major development or economic release out of Europe. And in Japan is where we get some mixed data. First of all, Japanese governmental agencies reported this morning that industrial production in Japan slowed during April to a year-over-year increase of 3.8%. So they were still up. That is industrial production, not they. Industrial production of Japanese manufacturing companies, utilities, and mines were up 3.8% during April as compared to April a year ago, but that the rate of increase in industrial production did slow somewhat, given that industrial production during the prior month, during March, was up 7.4%. But still, it was up, even though we somewhat of a slowdown there. More positively, in looking forward, however, agencies out of Japan announced earlier this week that orders from manufacturing companies for manufacturing equipment rose sharply during May. And that's a pretty reliable leading economic indicator. So that's another positive development. So we have thus far positive economic releases this week from the United States, from the Eurozone, and from Japan. And we also got some positive data out of China this week with economic firms in China and governmental agencies there reporting that industrial production at Chinese factories, mines, and utilities rose during May, and that retail sales, not only did they continue to increase during May, but the rate of increase accelerated during May. And that's a positive development. Now, retail sales and industrial production, by the way, are coincident indicators. They don't really give any indication what's going to happen in the future. They only show what has happened recently. But I mention those statistics because they are important economic statistics that one should stay abreast of. Now, I think that's probably all that I have to say for today. And looking forward to next week, I have some notes here. And in my opinion, based on more than 25 years of investing, trading, and speculating in financial markets, based on also always doing a huge amount of economic, financial, and geopolitical research, and just being very knowledgeable with the psychology of the markets also. Even though price momentum statistics for most stock market indices around the world remain at somewhat high levels, still they're not nearly as high as they were during the prior 2 weeks, and suggesting that therefore stock prices are nowhere nearly overbought than they were in the way that they were if we go back a couple of weeks. And of course we could continue to see stocks to move lower. I mean, stocks are also, or at least the major stock market indices that is, are not at oversold levels. They're kind of in between oversold and overbought levels, about halfway in between. So, that, therefore, it's difficult in trying to forecast what's going to happen in stock markets around the globe during the week ahead based on their short-term indicators. However, the economic statistics that are scheduled for release next week for the United States, if I am correct in my expectations and forecasts for those statistics, I think stocks, if they don't begin to move up on Monday, they're going to start to move up by Wednesday at the latest of next week, and that this pullback that we saw this week, this very modest pullback, it's a good chance it's already ended. For example, next week we're going to get some manufacturing statistics out of the New York, New Jersey, and Connecticut region. We're going to get data on housing starts, that is the number of newly constructed homes that were built last month, as well as building permits to construct homes during the month ahead. We're also going to get some statistics from the Federal Reserve Bank of Philadelphia regarding manufacturing activity in that region of the country. And the Federal Reserve's Open Market Committee, the FOMC, Federal Open Market Committee, that is the Federal Reserve's committee that determines monetary policy for the Fed, is scheduled to report on Wednesday of next week its latest decisions regarding monetary policy and interest rate policy. And in my opinion, we're not going to see any significant change whatsoever in what the Fed tells us, and that is, in my experienced research opinion, the Fed's going to announce that it's going to continue to reduce its purchases of U.S. government securities, but at the same time that it's still going to continue to purchase very large quantities of those securities, as well as mortgage-backed securities, in an effort to keep lending rates at very, very low levels. And if I'm correct on that, that's going to be a positive. That would be a positive development, and all of those other economic statistics that are scheduled for release next week, I think are going to be are going to show some positive indication of where the U.S. economy is headed during the months ahead. And if I'm correct on those statistics overall, then I think stock prices in general will rebound from this temporary and very modest pullback and continue to trend higher during the weeks ahead. So that's all that I have for today. I thank you for listening and watching, and I'll speak with you again next Monday.